What does war in Iran have to do with your mortgage rate? Quite a lot. My name is Jason Scott. I'm a mortgage broker with TMG, the mortgage group. And if you're coming up for renewal or you're looking to buy a home this year, you'll have noticed that rates have increased over the last couple of months. And this is because of the uncertainty around the war in Iran. Okay, so fixed rates are based on the bond market. The US bond market is the biggest financial vehicle in the world, for lack of a better word. It's bigger than the stock market in the U.S. If traders in the bond market in the U.S. are concerned about what the impact of war is on that country and debt and whatnot, they will start building in what's called a risk premium, and that drives up rates. And Canada, we get heavily impacted by the U.S. If you look at two graphs of Canadian and U.S. markets for mortgage rates, by and large, they're lockstep. So something goes on in the US, it impacts us. Okay. So now, if you're in a variable rate mortgage, you won't have seen things change yet. But if inflation takes off because of higher oil prices and that starts trickling through the economy, you could see the Bank of Canada increase rates. So, how do you deal with this as a homeowner? If you're going to buy a place or if you're coming up for renewal, now's the time to get a rate hold. Arguably, do the rate hold as a fixed rate, just in case. We can have a discussion as to whether or not it makes sense to go variable or fixed, depending on your scenario and your psychology around money and risk and whatnot. So if you have questions, give me a call. Jason Scott with TMG, the mortgage group, 780-720-2490.